economic reality is certainly tougher than what the markets have been saying so far, especially in the last few months. And a lot of our market valuations are dependent on risk on or risk off global trade, which is the issue. Therefore, if there is a risk off overseas, we see Indian markets correct. I personally believe that the reality at this stage is behind where the markets are, or markets are ahead of reality.
So that correction needs to happen in perception as well. You spoke about the risk on, the risk off trade as well, and every now and then there are these jitters to the risk on trade that we've seen play out over a while now. How worried are you about the fact that the risk on trade could take a serious knock and that could in turn affect the sentiment?
No, I think we will go through most of 2013 reasonably okay. There may be a little volatility from time to time, but overall I think loose monetary policy globally is likely for most of 2013. And therefore, even if there are fears of future interest rates going up, I think 2013 we will be able to have a global comfortable and benign liquidity situation.
So you wouldn't read too much into the minutes of the Fed meeting that seems to have caused a lot of nervousness?
I don't think the Fed does anything in 2013. This is my personal view, and that's the sense one has got in totality. Therefore, we may be coming closer to an end of a loosening cycle, but we are not at the end.
So there's no cause for panic?
No cause for panic. It will be easy money situation globally. But we have to get our act together in the next few months.
In the conference of yours that just got concluded a few days ago, what's the sense that you got speaking to a lot of foreign investors who must have come in as well? They've been the ones pumping in a lot of money into India. Is that confidence still there, or do you see them being a little tentative going forward?
I think the investors are doing a lot more detailing and are focusing bottom up. They are not necessarily very excited at this stage top down. Therefore, select companies, attractive valuation and high quality governance, that's the kind of companies investors feel comfortable being with.
But do you think the kind of liquidity that we've seen come in from foreign investors is likely to continue, or do you think that's at risk as well?
The liquidity is really linked to the global liquidity situation, which I feel will be reasonably benign in 2013. And that's the positive. Therefore, portfolio flows give us some comfort to put our corrective action in place.
You spoke about things that we need to do as well to fix our economy and markets. The fact remains that through the course of much of 2012, the retail investor has been completely absent. In fact, he's been absent for years now, and domestic institutions aren't quite buying. What can the government do to get them back to the market, especially the retail investor?
I think you've got to do two things. First of all, the hurdle rate for the retail investor in terms of his alternative investment opportunities, it's very high. Therefore, if you take any individual today with some of the tax breaks he or she can get, his hurdle rate post-tax is 8 to 9%, which is pre-tax 12 to 13% in rupee terms. And that's a pretty high hurdle rate on fixed income to go out and buy equities. So, one, lower interest rates. Number two, we need to build confidence back that investment cycle is happening, growth is encouraged, entrepreneurship and corporate sector will be supported by government. And that kind of confidence will lead to a positive investment cycle. But that's something which will take time. And in the interim, therefore, we need to give what I would call as little bit of steroids to get investors back, which is hopefully some tax breaks in this budget to nudge people into equities.